Welcome back, everyone. Carl Weiss with Fairway Independent Mortgage Corporation and our financial literacy podcast. And then, of course, today we have our esteemed guest, Rachel Rojas from Goosehead Insurance. And if you've missed it, we've covered in depth homeowners insurance in a couple of the previous sessions. And now we're jumping into everybody's favorite topic in the world, which is car and vehicle insurance, because this is awesome stuff. There is so much, I think, personally, about vehicle insurance that most people kind of get a glazed look in their eyes and don't understand. So I'm really happy to have you help us understand what some of the nonsense is because we hear all these terms and these things from insurance companies, and I don't think most people really get it. So welcome back and take us through some of the auto coverages and what we're getting when we pay for this car policy that we have to have by law.
Right. Yeah, I mean, as you say, it's no one's favorite topic. But once you know a little bit more about it, it does give you, a little bit more information to help push you at least know what you're covered for, because that's the biggest thing, right? Um, so one of the biggest, I'd say the biggest coverage on your auto policy is going to be for your liability, right? This is something that you cause. So the one part of this is going to be for injuries, right? For bodily injuries. So your injury liability is going to cover, medical costs due to, injuries. And then another part of that liability is going to be for property damage. So this would cover repair costs for any property that you damage, not your own. So that's good to know. Um, the next major coverage on a home or now I'm thinking homeowners on an auto policy is going to be your uninsured slash, underinsured motorist coverage. This again is broken up into bodily injury and property damage. So for bodily injury, this would cover medical costs after an accident with an uninsured or underinsured driver, essentially. And then same again with property damage. This is going to cover repair costs after an accident um, with an underinsured driver. The next major,
That's their property. The
yes,
You hit an uninsured or underinsured driver's vehicle,
yes.
and on our own policy, we have a provision that's going to cover their property as well as the medical.
Mm-hmm.
Gotcha.
Exactly. Yeah, and then next major thing here is going to be for your collision and comprehensive coverage, right? These are, together is what is considered, full coverage. As long as you have these on here with, your standard liability coverage as well. So your collision coverage is going to cover repair costs to your car. And this is if you crash, with another vehicle or another object, like a tree or a pole or something like that. And then your comprehensive coverage is going to cover repair costs from events that are outside of your control. So think, weather, hitting an animal, which actually isn't considered a collision, which is funny, or theft, vandalism, all of those things. That's going to be for your comprehensive coverage. And those are going to be, the core coverages that are available. There's others that people like to opt in to have. Common ones that you see are going to be, your roadside assistance coverage or coverage for, a rental car, things like that. But the previous coverages that I talked about are going to be the major ones to know.
And how do you sort of pick, right? Because you see the comp collision and everybody kind of throws around the standard numbers.
Right.
How do you know if that standard set of numbers is even reasonable, let alone something you should actually try to pick?
Yeah, that's a good question because I think, at the end of the day, people want good coverage, but they also want a good price, right?
Hmm.
Um, Full coverage, it's something that is optional, right? And that is something that people consider based on their given situation, right? So essentially what this full coverage is going to mean is that you have your, your liability, which you need anyway. And then added onto that, you would need comprehensive and collision coverage, right? Um, Full coverage is not required by law, so you don't need the comprehensive and collision, but it is, highly recommended if you kind of fit the requirements. So the biggest requirements here are going to be, just depending on your vehicle, also the requirements of your loan if you do finance it, and your financial situation. If you have a financed car, full coverage is required usually by most lenders, but that is something that you would be told right off the bat, right? Um, if you don't want to be stuck paying for repairs to your car or, you wouldn't be able to afford them, you may want full coverage. That's
Right.
something that I would definitely highly recommend in that situation. Um, and just in general, it is something that I would highly recommend because it offers you, coverage for, your property and very important things. But there are some reasons where or situations, I should say, when you may not need it. For example, if your car's market value is very minimal, if it is a couple $1,000s maybe, you may not need it.
Okay.
You may not need that full coverage. Or another thing, you may not need collision coverage if your vehicle isn't being driven currently. If it's just being, garaged or in storage, you wouldn't necessarily need collision coverage because, you're not going to be colliding with, you're not driving it, right? You're not going to be
Right.
colliding with another car per se. And also if, you have comprehensive or collision coverage on your vehicle on another policy, you wouldn't need it either. And that's not to say you don't need it for sure, but it's just, maybe not as recommended in these scenarios.
Gotcha. So there's some adjustability with some of these policies where you really got to kind of take it apart and figure out what you want first.
Exactly. Yeah, because by law, technically, you only need to have just liability coverage. That's it, right? So, this would be covering, bodily injury and property damage to an instance that you cause, right? But there are so many other coverages that are available, not required, but available. So it's about understanding what they are and seeing if it's something that you see fit, So it all comes down to personal preference at the end of the day, except for liability, because you need that anyway.
You mentioned liability, so I guess I start thinking about something we talked about earlier on the homeowner side, which was the different riders. And of course, you can get a separate liability rider through the homeowners, right? Through an umbrella policy. Does that help you in the vehicle side of the world?
No, so yeah, that would be more something that is under, maybe an umbrella policy, if you will, that would kick in once you exhaust the limits of, your policy.
Okay.
But in terms of a rider, that's something that you see, on a homeowner's policy. And that's just because there's such different, policies and
Mhm.
different coverages. Um, so when it comes to riders, think homeowners policy essentially. There, of course, rider is a term that is just, related to, like an endorsement or an add-on. So you could consider certain things on an auto policy a rider, but that's just to say that's just an optional coverage that you can add on. So it's viewed a little bit differently because a homeowner's insurance policy is just more, there's more moving parts to it.
Right. And can you adjust the liability coverage on an auto policy if, because they seem to, like the numbers that they throw out seem to be very standard from a lot of places over time.
Yeah.
And if you think, gosh, gosh, if I really did run into a family of four and, killed a bunch of people, like that's not going to be enough to keep me, you know, out of jail. Um, how do you adjust the liability side if you think, dang, I have a really expensive vehicle and they have a very expensive vehicle. I don't want to exceed those limits and come out of pocket for that stuff.
Yeah, that's a great question. I think deciding on your liability limit is definitely, writing on a good number of factors there. I think one of the biggest ones is obviously going to be price, Say you want super high limits, but maybe, you're riding with, price concerns, then you may have to think about getting, lower liability limits for price reasons. But of course, it is up to you at the end of the day, if you have a very, expensive vehicle and you have, you know, personal, I guess, opinions about what kind of liability limits you want, and you have, the financial means to back it up. You could, get super high limits if you want. It's really up to you because you're not limited to the level of liability that you can get. It's just based on everyone's individual, situation and individual preference at the end of the day.
Okay. And how are the other limits kind of calculated? The comprehensive and the collision and stuff like that.
Yeah, so the biggest thing to know here about your collision and comprehensive coverages are going to be the deductibles on there, right? So the deductibles that you have are going to apply to the, the collision and comprehensive. Um, and these aren't at a, it's not like the liability coverage where you have, certain 100,000 here for property damage for, bodily injury, so on and so forth. These are instead subject to a deductible. So, you have to pay that much out of pocket, and then insurance would kick in, essentially to cover the rest. So that looks a little bit different actually than your liability or your uninsured coverage because we're working with a deductible instead of that, like per se a limit.
Okay.
So it just looks a little bit different.
Do you see that you do deductibles in the vehicle insurance work? I mean, similar to they do the way they do in homeowners insurance, right? The higher the deductible, the lower your premium. Does it tend to make sense in the vehicle side of the world as much as the home or vice versa?
Yeah, so essentially you are dealing with the same sort of setup where the lower deductible is going to mean a higher premium,
Mhm.
and vice versa. Um, I would say since there's such, different types of policies, I would say just on my end, what I see is that the difference in deductible makes a bigger impact on the home premium, but not so much on the auto premium. And that is because of your deductible options, right? On
Okay.
a homeowner's policy, if you're opting for 5% deductibles, we're talking about, however much the home is worth, tens of thousands of dollars for a
Right.
deductible. You can't even get that high of a deductible for, collision coverage or comprehensive coverage. The, standard deductibles you see are maybe, 500, 1,000, maybe maximum 5,000. So you're just dealing with different deductible amounts and different coverages, so they're not going to have as much of an effect on the premium as you would think. They still do affect it, but not like the home.
Okay. Because we're dealing with smaller dollars, right? I mean,
Right.
even there,
Exactly.
even though there's quite a few expensive cars, on average, it's so much less than a home, right? So,
Yes, I know.
so
Yeah, we're dealing with very different types of, um, assets, if you will.
for sure. So how do they calculate rates?
Yeah, that is probably the biggest question that I get asked because, like the homeowners policy, there's so many different factors that go into it. One of the biggest ones, which is probably an obvious one, is going to be your driving history.
Dang,
Um,
that matters.
right? That red light that I ran matters. Um, yeah, the driving history is something like the home, that gets pulled up, and that is um definitely a huge factor. And it takes, maybe 3 to 5 years, kind of like the home, for that to come off. But even then, you still, it's going to be rated in. Just depending on the company, it would depend how long into the, past it's taken into account, things like that. But obviously, driving history is going to be a big one for obvious reasons. Um, your location is also going to be a big one too, or essentially your garaging address. This is because if you are in a big city, you're in, for, where I am at now, like DFW, or you're in Phoenix, something like that, you are in a big city where there is, more traffic, more risk associated with that, compared to if you're in a very rural area. Another thing is also the type of vehicle. Um, if you have you just bought a new car, of course, that's going to be more costly to insure than an older car. Um, which is funny because it's kind of the opposite with the home, it seems.
Right. It is.
Um, yeah. And then age, of course, is a big one too, because, they view, um, say a mom with kids or something, different than her 16-year-old son,
Right.
because there's just a lot of risk associated with, younger age groups and things like that, which that's another one that is, you know, no surprise.
Hmm.
And
For sure.
credit score is also a big one. That's something you can't escape. Same with the home. It's something they look into to determine your, financial responsibility. So those are going to be the biggest factors. And I think, in my opinion, they're a lot more straightforward than the home.
Because there's more clear cut things that you may have done, right? As in the driving record, the age, like the type of car, right? Because it's, you know, certainly uh the basic Honda is going to be a little different than the Lambo for the
Exactly.
insurance costs, right? Where on the home side of it, it's not so clear cut why two different homes could be so drastically different of a similar, value,
Mhm.
let's
Yeah,
say.
that's exactly right.
Hmm. And what happens if I just say, nah, I'm not interested in getting insurance?
Yeah, I mean, you
Why?
definitely hear that, and all you say to them is, it is illegal and they're very aware, or maybe some people aren't aware even. But yeah, if you don't have auto insurance, it's not like the home where, it's not necessarily required, but it's good to have it. It's like you need it, right? And that doesn't stop people from not getting insurance. That's why people opt for that uninsured, underinsured coverage
Right.
on there, but what you're asking for is basically, fines to say the least, let alone having your license suspended, having all those out-of-pocket expenses for repairs and all that stuff. So, although, it is the law, there's also so many things that come with that as well.
It's funny because to me, in the homeowners insurance world, if you cancel the homeowners policy or something happens to it, they force place insurance from the lender side. It's funny that the
Mhm.
auto side doesn't do that.
I know it is very strange, and I've always thought about that too, because um why not? Like you see so many uninsured drivers out there that really should have insurance. And it's funny that there isn't a system in place, like you said, with lenders, for cars.
Right, because every driver on the street, essentially, if they have under or uninsured motorist coverage, it's everybody's paying for the few people that don't have it, right? It doesn't work like that on the homeowner side. It's interesting.
I know it is something that is just very funny. One of the, interesting differences between the two, because they are, very different things.
Yeah. So help us understand some of the, what the limits mean that we see these numbers. We don't, I don't know. You always see the 100, 300, like these are standard numbers that we see on these policies, but what do they actually mean? And do we need
Yeah.
it?
That, you can see that those slashes or those numbers in your policy and really have no idea what that means. And that's really fair because it just looks kind of like a complex fraction of some sort. But when you see the slashes, right, that's gonna mean a split limit. And what that is split between is three different things. So the first number is going to cover, or is going to essentially, dictate the bodily injury coverage per person. And so say we're talking about in this case, liability, this would also apply to your uninsured coverage as well. But say we're just talking about liability. The first number would be for that bodily injury per person in an accident. The second one would be for, again, your bodily injury, but this is for an entire accident, an entire occurrence. So if more people, if more than one person are involved in that, and then the final number would be your property damage coverage. So an example of this, if your limits are, say, 100, 300, 100, you're like, what does that mean? Well, the first number, the 100, would mean that you have a limit of $100,000 per person in bodily injury. And then you would have $300,000 again in bodily injury, but for an entire accident or entire occurrence. And then you would have $100,000 worth of coverage in property damage. So that's the easiest way to describe it. Just because, it's strange that on policies you will just see those slashes in the numbers, and that's about it.
Right, and you're so sort of supposed to know what that means somehow
No.
intuitively, and it's not super intuitive. So do we take that to mean then, so that I think it was the 100, 300, 100, the at the 300, so we're talking about the entire collision, the whole accident, there's $300,000 to be paid out whether you run into, two people or 12 shoved inside of a minivan.
Right. Yeah. So if you have, if you're dealing with a really bad, accident with injuries for, we're talking catastrophic, right? So many people that are affected by this. Um, it may be more, than that amount. It may
Sure.
be depending on how many people. And that's
And
obviously
then what
stems back
happens in
to
those situations? What have you seen like, somebody has a severe accident, obviously, there's probably people whose lives have ended and that you're going to exceed these policy limits. What really happens to that driver who may have been at fault?
Yeah, that's a great question. I mean, those sort of catastrophic losses are something that you hope would never happen, but obviously it has happened before. And it stems back to your original coverage, right? If you had pretty low limits to begin with, and then you were put in this situation, I mean, that just means a lot of I mean, one of the things, obviously being a lot of out-of-pocket expenses, but then at that point, you're also probably dealing with the law, and court and all that stuff. So you will have, at that point, bigger issues than your insurance. But then obviously from an insurance standpoint, that just means, huge rate increases, and it just overall not a good situation to be in. But it does happen. And that's why, having greater limits will protect you from, something like that. And even then too, if you do have, pretty high limits, that will usually qualify you for an umbrella policy as well. That will help you out if you exhaust the limits of your policy, essentially.
And that umbrella policy that you're referring to is the one tied to your homeowners, right?
Yes.
Okay. So that separate umbrella policy, which is just typically what, liability only, I assume?
Yeah, so an umbrella policy is, yeah, for those really bad scenarios, or someone's coming after you, from a legal standpoint or something like that, or you have a lot of assets to protect. That is something where then you would probably consider that liability policy, or not the liability, the umbrella policy, because it helps you with that extended, liability if something were to happen.
Okay. So in that case, that 100, 300, 100. So at a catastrophic accident, 300,000 is all the insurance company would pay out on that accident with multiple individuals in the other vehicle um, that occurred. But then having a separate liability policy, assuming that the damages were or the lawsuits are greater than the 300,000 that the insurance company would provide, that's where your liability umbrella policy for your homeowners could kick in.
Yeah, so the umbrella, it's not something that everyone has, and you can't even really qualify until you're at like a certain point of coverage, But
Okay.
if something really bad were to happen and you did have an umbrella policy, that is the whole reason that you have it.
Okay.
So it's not something that you need, but if something really bad, like a really bad accident or something like that where lives are lost, and obviously then you're dealing with bigger problems at that point. But that's, yeah, where an umbrella policy would be under consideration to have.
Cool. And that would be just another thing for somebody to, talk to you about and really kind of dig deep to see, okay, what kind of assets, are we trying to protect? And, we all like the privilege and that of driving, but there can be some serious you know, risks that come along with that if you're at fault, certainly. Even if you're not at fault, of course. Um, but this really relates to you as the driver being in fault, like your responsibilities and your coverages, right?
Yeah, exactly. Because, say you are, you know, you're pretty well off. You have a lot of assets at your, disposal, essentially. You have a very nice car or something like that. And if you, get into an accident, a really bad accident that you cause that someone is trying to come after, like they know you have money and they're coming after your assets and your money and everything like that. That's where in those off chances, you may exhaust the limits of your policy.
Hmm.
Say you're at, some high, so for example, like a higher limit threshold would be, like a 250, 500, 100. That's a, pretty high limit there. Um, at that point, you'd probably qualify for the umbrella and think that that's something that you would need. And obviously, not everyone has one, but it's based on your individual scenario and if you, see that being something that's important to you.
Gotcha. What about the other side of the world? What if my vehicle is very modest? I carry liability only, and I'm in an accident and it's not my fault. Is my car then, you know, going to be repaired or replaced by the other driver's insurance company, even though I only have liability?
Yeah, that's a great question. So when it comes to a scenario like that, if you were to get an accident that someone else caused, right, you could claim that on your own insurance. And assuming you're decided to be not at fault, that would be considered a not at fault accident. But not at fault accidents on your own insurance actually can increase your rates as well, which is crazy. Um,
What? Say that again. I want to make
yeah,
sure people
so
hear that.
yeah, not at fault accidents that are claimed on your insurance can increase your rates
Okay.
because it's still involved in your, driving history. And it is an accident, regardless. So that's why the best way to go about that, in my opinion, would to claim with the other person's insurance.
Okay. And not to go to your own insurance company.
Correct.
Gotcha. Okay.
Yeah, that's something that you definitely want to consider filing with their company because if you file with their company, it will never, won't show up on yours. Um, and you will be, usually better off. I would say the
Because you're not at
contact,
fault, right? That's the reason it won't show up on yours because you weren't at fault.
exactly.
Gotcha.
Yeah, so if, you cause something, you can't just file that against theirs because that wouldn't make any
Right.
sense.
Right.
But yeah, if someone else caused something, you would have, best case scenario would be, or not best case, but best course of action, I would say, is to file with their insurance.
Interesting. If you had liability and you filed with your own company, and then they, of course, have it's a driving record, of course, it's going to be a claim. Would you do that because you expected your own insurance company to pay out on your behalf, even though you knew you only had liability, or are they working to the other insurance company to settle those damages of property, let's say, in medical?
Yeah, that is a good question. So, if we're talking about a scenario like that, and you file with your own insurance company, they will have their own, formula and everything like that, and decide how you get paid out. It'll be different from company to company, but the difference there is that if you file with your own company, there'll probably be a faster, turnaround time, much faster, I should say. And they're still going to help you out, but only to what you're covered.
Okay, interesting. So knowing what you have in terms of coverage is really important because it may dictate what you do in the case of an accident, especially if you're not at fault.
Hmm.
Because you
Yeah.
could do that same thing even if you had full coverage, right? If you're not at fault, you could make that claim against their insurance company as well, and your company may not never know.
Yeah, exactly. Yeah, and actually It's so funny that you say that. This actually just happened to me. I got in an accident. It was someone else's fault, right? And at that point, being in insurance, you would think I know. Um, they tell you, or like, the cops come, whatever, they tell you, okay, make sure you, put your claim in there and have everything documented. So here I am filing a claim with my own insurance company and then realizing, wait, I'm an insurance. Like, I know that's not the right thing to do. And then I actually ended up filing with the other person's company. Did it take forever to, get the answers and get the, reimbursement, everything? Yeah, but at least at the end of the day, there's nothing on my record, right? And I wasn't at fault, so that's the good thing. But yeah,
Yay.
but that's just to say, if it's not your fault, then your insurance company never has to know.
Love it. That's great. Um, I know we talked about this on the homeowner's side, so if people haven't gone back to watch that, can you talk about bundling for the
Yes.
home and auto now that we're on the auto side of the world?
Yes. So bundling, like I was saying earlier, is always a great option because it will, definitely secure the best price of the home and it will save you money on the autos as well. It's not to say that every company will offer a bundle, that every company will, if you have a bundle, that you'll save on the auto as well. So that just depends on, the individual company, what they offer. But obviously, companies love to bundle you because that means they have, both lines of business. So you'll always, I would say more often than not, see a discount on the home and auto, which I always recommend. As I was saying, more on the home side of things earlier, if you are working with a scenario where maybe a bundle option doesn't make sense, where the home is cheaper with one company and the autos are cheaper with one company, and those combined is actually going to be less than your best bundle option, then it's something to look into to do two separate companies.
Right.
So while bundling is still a thing, it's obviously dependent on your preference at the end of the day.
And that would be a great reason to for people to call you is so because as a broker, you have the opportunity to look at multiple carriers, right? And
Yeah,
so, if they were to just on their own call Flow and let's say get a quote on that, then they would have to do that every single different carrier that they wanted to go to, and they're all different questions. They all have different coverages, and it's convoluted to say the least to try to shop for both a bundle of car and and home together, I think. Where if they had one broker, you could take care of all those needs and do all the work for them.
exactly. Yeah, because you can go through, like you were saying, multiple different companies and get multiple quotes, just kind of shop around on your own. That is why brokers exist, right? They do that for you. And of course, I am a broker, so I see the benefit in that. But a lot of people don't even know, um, what brokers do or that there is that benefit to it. Yeah, and the biggest thing is just having that choice, right? If you are dead set on wanting to go with, a certain company and you don't really care about the other options out there, then do that, right? But if you do want access to other options and want to know kind of what the market looks like, then it is best to go through a broker because, or else you would be spending so much time
Mhm.
shuffling between companies and brokers that it just gets exhausting for everyone. So, yeah.
And I think it's also that's a great point. And I think that even if you have the time, you may not understand the terms because of just the language that's being used at every different company trying to, get to an apples to apples comparison for price, right? Because they're all going to have different limits and different terminology and different factors and deductibles and all these things. And so to do that on your own, you would probably have to almost be a licensed insurance professional to even make heads or tails out of some of the different companies you would want to,
Oh, yeah.
compare against. So uh, using a broker like you that can, do all the shopping and understand the intricacies of all the different policies is a huge advantage that clients don't even really have to pay for directly.
Oh, 100%, right? And as I've been saying just kind of throughout, everything depends on everyone's unique situation. So what works for one person might not work for another. So it's a good idea always to know kind of what options are out there, what you qualify for, um, and to just look around, to just be more informed in general, and that goes for most things, but especially for insurance, it's good to, just know what options are available. And with that being said, it's good to know that you have a resource to go to if you want all those options to be, um, listed out for you instead of you figuring out the hard way.
Well, and speaking of that, if people have direct questions, you guys can all please give Rachel a call directly. You can reach her at 214-451-4829, and you can get hold of her, and she can take you through and see based on your specific circumstances what's going on and help guide you through the insurance process. So thank you so much for joining us, Rachel,
Yeah,
today. It's
thank
been
you.
a wealth of information, and I hope everybody has a new appreciation and a new love for insurance and at least understands what some of the things mean and how to kind of navigate the waters and where to go to for resources. So thank you so much.
Yeah, so thank you. It's a pleasure um, to be on here today.
Thank you. Take care. We'll talk soon.
All right. Bye-bye.